Assalamualaikum to Puan Nur Hazila and Encik Wan Muhammad Farid. We are from JBA 1145E. Today, we are going to present financial and technical analysis for QL resources. My name is Muhammad Fariz.
My name is Muiz Adin.
My name is Haris Imran bin Muhammad Zainuddin.
My name is Azri Zaini bin Abdul Rashid.
We are going to start with financial analysis.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muiz Adin bin Muhammad Azizan. I am going to explain about ratio analysis of QL resources Berhad. First one, vertical analysis of QL resources Berhad from 2017 until 2019. Liquidity ratio. The most performed in current ratio and quick ratio is 2018, which is 1.58 times and 0.94 times respectively. And for net working capital is in 2019, which is 506.45 million. Next, activity ratio. The most performed on total asset turnover, average collection period, and account receivable turnover are on 2019, which is 9.83 times, 30.73 times, and 7.78 times respectively. But for the inventory turnover is in 2018, which is 5.22 times. For leverage ratio, the most performed on debt-equity ratio and debt ratio are in 2017, which are 0.20 times and 2.90% respectively. But for time interest earned is 2019, which is 114.99 times, because for time interest earned, the higher is better. Last, for vertical analysis, profitability ratio, the most performed for net profit margin is in 2017, which is 6.87%, but for gross profit margin is in 2019 with the amount of 1.90%. The best on return on asset is 6.50% in year 2017, but for return on equity is 1.20% in year 2018, and the best operating profit margin is 9.35% in year 2017. Second one, horizontal analysis of QL resources Berhad, including 4 other competitors in 2019. Liquidity ratio. Sinmah is the most liquid and is apparently in a better position to pay off its liabilities. This is because the company has 2.54 times for current ratio and 1.34 times for quick ratio. But for net working capital, QL has the highest value of 506.45 million. For total asset turnover ratio, QL is leading the competition with 9.83 times. The best for average collection period is PWF because it has the lowest value of 19.39 days. For account receivable turnover, we can see that PWF has the highest number, which is 11.73 times. And for inventory turnover, Teo Seng has the highest number of inventory turnover with 7.14 times. Next, leverage ratio. The most performed debt equity ratio is Teo Seng and PWF because they have the same amount of lowest number, which is 0.15 times. But for debt ratio and time interest earned, QL have the best performance with 3.22% and 114.99 times respectively. Profitability ratio. We can see that Teo Seng has the highest percentage of net profit margin, which is 10.76%, and Teo Seng also has the highest percentage of gross profit margin with the value of 39.12%. Next, for return on asset, Teo Seng has the highest percentage with 10.46%. Teo Seng once again lead the return on equity by the value of 19.19%. We can also see that Teo Seng dominates the operating profit margin by 15.74%.
Assalamualaikum warahmatullahi wabarakatuh. My name is Azri Zaini bin Abdul Rashid. I would like to start my presentation with risk analysis. Risk analysis is a technique used to identify and assess factors that may jeopardize the success of a project or achieving a goal. There are 5 measurements required in this analysis. For expected return, the highest value can be seen in QL Resources, which is 25.6762%. For variance, the highest value can be seen in Sigma, which is 14.0414%. For standard deviation, the highest value can be seen also in Sigma, which is 3.7472%. For covariance with KLCI, the highest value can be seen in Kyoseng, which is 0.3429%. Lastly is coefficient of variation. The highest value can be seen in Sigma, which is 94.9169%. Next is capital asset pricing model. The capital asset pricing model, CAPM, is a model that describes the relationship between the expected return and risk of investing in a security. CAPM is widely used throughout finance for pricing risky securities and generating expected return for asset given the risk of those assets and cost of capital. The CAPM formula is used for calculating the expected return of an asset. For QL Resources, the beta value is 0.4509, while the expected return is 6.0133%. For Kyoseng, the beta value is 1.0602, while the expected return is 7.36%. For Lei Hong, the beta value is 0.0761, while the expected return is 3.610%. For PWF, the beta value is 0.395, while the expected return is 4.825%. For Sigma, the beta value is 0.7069, while the expected return is 6.0139%. Regression analysis. Regression analysis is a reliable method of identifying which variables have impact on a topic of interest. The process of performing a regression allows us to confidently determine which factor matter most, which factor can be ignored, and how these factors influence each other. The regression equation is written as y equals to a plus bx plus e. Y is the value of dependent variable, what is being predicted or explained. A or alpha is a constant equals the value of y when the value of x equals to 0. B or beta is the coefficient of x, the slope of the regression line, how much y changes for each 1 unit change in x. X is the value of the independent variable, what is predicting or explaining the value of y. E is the error term, the error in predicting the value of y given the value of x. It is not displayed in most regression equations. Security market line. The security market line (SML) is a line drawn on a chart that serves as a graphical representation of the capital asset pricing model (CAPM). The graph above shows the security market line for QL Resources, Kyoseng, Lei Hong, PWF, and Sigma. The companies are plotted based on the expected return and beta for all the companies. Our chosen company, which is QL Resources, and the expected return is 25.6762%. This shows that the company is overperforming and undervalued. Any stock below the security market line is considered as overvalued, while any stock above the line is considered as undervalued. The last topic is company intrinsic value. Intrinsic value is a measure of what an asset is worth. Based on the data above, we can see that the expected return for QL Resources, Kyoseng, Lei Hong, and PWF are undervalued because the expected return for the companies is lower than its average return. This indicates that it is an undervalued stock, in which means that the company's value is higher than the current market price. New shareholders can buy the stocks because the undervalued stock will soon to rise. Meanwhile, for Sigma, it shows that the company is overvalued because the expected return is higher than the average return. Overvalued stocks are good for sell opportunities. Existing shareholders can sell the stocks because the overvalued stocks indicate what people are willing to pay for it. Existing shareholders also can sell stocks or even hold it for a long-term investment. That's all for me. Thank you.
Assalamualaikum. My name is Muhammad Faris. Okay, for this part, we did a short-term and intermediate-term analysis for selected stock. Thus, this comparative analysis is measured by price in order to understand measurement of price between company and KLCI. Plus, these analyses are help investors to know and choose the best stock company besides to decide whether the company are an underperform, overperform, and outperform. Based on the chart, there are two different colors of horizontal lines. The blue line constitute QL resources and the orange lines constitute KLCI. There are also three colors for horizontal lines. The blue line constitute the cut-off this analysis which on 31st December 2020. The green line constitute the 1 month period which started on 1st December 2020. And lastly, the pink line constitute the 3-month period which started on 1st October 2020. From the chart, we can see that QL resources has a different trend with FBM KLCI. We can see that QL resources is uptrend. It is a direct relationship. As the ringgit falls in price, the performance will fall too. While we can see that the FBM KLCI is in sideways trend. The horizontal price movement that occurs when the forces of supply and demand are nearly equal. To summarize, QL Resources Berhad was overperformed compared to KLCI markets due to increasing in return. Okay, next. QL Resources versus competitors. Firstly, the line chart was indicated on the comparative analysis from 31st December 2017 until 31st December 2020 between QL Resources Berhad and their competitors, that is Tiong Sang, Lei Hong Berhad, PWF, and Sinmah. Thus, this comparative analysis is measured by price in order to understand measurement of price between company, competitors, and KLCI. Hence, this analysis is help investors to know and choose the best stock company besides to decide whether the company are an underperform, overperform, and outperform. To compare QL Resources with other competitors is that QL Resources are having an uptrend performance in 2020 while the other competitors are having sideways trend. This can be seen that QL Resources in 30 December 2020 that shows this company are in peak trend at 162.81% after going uptrend in past few months. Moreover, Tiong Sang Berhad in orange line shown that they are having sideways at 23.42% in 31st December 2020. Next, Lei Hong Berhad were in green line, illustrate that in year 2020 that is the 1st December they are having sideways trend that price likely go down at 56.10%. Other than that, PWF Consolidated Berhad in yellow line shown that in the year 2020 they are having sideways trend also, which price slightly rise up to 20.92% at 31st December 2020. Last but not least, the purple line was referring to Sinmah Capital Berhad. The price performance of this company in 2020 was explained the sideways trend at 6.96%. After all, to conclude, we may say that QL Resources Berhad is the top company that involved in which subsector of livestock and agro-based products. In other words, QL Resources Berhad was overperformed among all competitors. Thank you.
Assalamualaikum warahmatullahi wabarakatuh to all the panels. My name is Haris Imran bin Muhammad Zanuddin and I would like to present trend analysis. As we all know, trend analysis consists of 3 trends, which is the main trend, the secondary trend, and the minor trend. For the main trend, is currently uptrend, which is the blue line, and it started from 4 ringgit and 42 cents until 5 ringgit 93 cents. It started from 31st December 2019 until 31st December 2020. I suggest that long-term investors should execute long positions, and short-term investors also execute long positions. Secondly, is the secondary trend, which is currently in sideways. Started on 29th May 2020 and until 26th November 2020. The highest price, which currently in sideways, was 6 ringgit and 71 cent. The lowest price was 6 ringgit 30 cents. I suggest that long-term investors should hold their positions, and also short-term investors also hold their positions. Lastly is the minor trend. The minor trend started on 15th October 2020 until 16th December 2020, and it's currently on downtrending. The price dropped from 6 ringgit 94 cents until 5 ringgit and 78 cents. I suggest that long-term investors should keep and hold their positions, while short-term investors should sell their positions. Next, I will be explaining indicators. For indicators, there are two terms, which is short term and intermediate term. For short term, the period of analysis is 1 month, and the indicators that are used are moving average, MACD, RSI, ROC, and stochastic oscillators. For simple moving average, the signal is sell because the closing price moving below the moving average. Next is the MACD. The signal is also sell because the MACD crosses below the signal line. Thirdly is the RSI, which is the relative strength index. The signal for RSI is hold to buy because the RSI is near 30 and yet to cross the oversold line. Next, the ROC. The signal for ROC is sell because the ROC value is greater than 0. And lastly is the stochastic oscillator. The signal for stochastic oscillator is sell because the K line is below the D line in the overbought range. Next is the intermediate term. The period of analysis for intermediate term is 3 months. And also the indicators that are being used are moving average, MACD, RSI, ROC, and stochastic oscillators. For simple moving average, the signal is sell because the closing price is moving below the moving average. Next is the MACD. The signal for MACD is also sell because the MACD crosses below the signal line. Next is the RSI. The signal for RSI is hold to buy because the RSI is near and yet to cross the oversold line. And next is the ROC. The signal for ROC is also sell because the ROC's value is greater than 0. And lastly is the stochastic oscillator. The signal for stoch is sell because the K line is below the D line in the overbought range. Lastly, I would like to conclude that both terms, which is the short term and the intermediate term, can be used by both investors, which is the short term investors and long term investors can use these methods because there's not much difference in the signals that are given by the indicators. So there's not much difference in the signal. So the both investors can use this method to execute their positions properly. Thank you.
We would like to conclude our presentation today. Thank you Puan Nur Hazila Ismail and Encik Wan Muhammad Farid Wan Zakaria for your time to participate in our presentation. Thank you.
Thank you.
Thank you.
Thank you.